Jonathan Barratt, CIO of ETO Markets. Jonathan, very good morning. Great to have you, as always, on NDTV Profit. Very quick word on crude, more than anything else. How worrying is the situation in Iran, considering what Trump has been saying, and then the response that has come from the Russian Foreign Ministry, saying that the US should not interfere in Iran?
Look, I think it's quite significant. In fact, it sort of concerns me a lot for the price of oil. Remember, Iran is a major producer. That's 3 million barrels it puts into the market a day. So if any upset happens there, that's going to crimp supply. It's going to crimp supply in economies that really need it, particularly India and China. And that, to me, is quite a major concern. I think the worrying thing that we have is the fact that Trump says a lot, but he has been quite accurate with what his intentions are. And the concern that we have is that he'll play to his intentions. And that's, I think, a worrying sign for everybody, I think, in terms of where crude prices go.
Jonathan, morning. I'm just wondering where you're ranking these risk factors that have emerged in 2026, right, on geopolitics. On the one hand, you've already had Venezuela, and I think the market has absorbed that. But you have the big comments that are being made on Greenland as well. And then you have Iran. So all of this put together, and then you have monetary policy in the US that is facing uncertainty with the move on Jerome Powell. So how are you ranking these things from the global standpoint?
Look, I generally think at the moment the most important thing is what's happening in Iran, because that's supply. Okay, then I think it sort of follows back to, like Greenland. I think that's an issue, but I sort of discount that as a lot of talk. I think the more geopoliticals that we're focused on in the Middle East is a worry, because it's a tinderbox, as we know. We've got issues. The Straits of Hormuz, lots of supply goes through there. And if there's anything of a conflating there, then we have major issues on that supply. Donald Trump's, I think, finding... He's just putting out, there's so many fires that he's looking at the moment, and that to me is the concern. Iran is the big one at the moment, and I think that's a focus that we're all got to be looking at.
Yeah. The other interesting thing is that the weekly trading volume in credit default swaps tied to major AI firms has hit all-time highs in December 2025. So the street seems to be worried about what happens there. Jonathan, one is, of course, crude. The other is what's happening elsewhere. I wonder, what to your mind is the most important piece to monitor? Is it crude and what's happening between Iran and US, or are upsides in crude cap? Part one is that. Part two, beyond crude, anything else that you're watching?
Look, there's a lot out there. And I think one of the really interesting things that we're seeing is there's a disconnect between where equity prices are and what we're seeing in terms of real numbers. We had the government shutdown in the US. We've now got the economies sort of slowing, so the equity market shouldn't really be there. There are concerns on the AI. There are concerns on consumer sentiment. The long-term inflation rate is still very high. The Fed's been questioned as to its independence. There are a lot of moving parts to this. And what I don't understand is why equity prices are still at record highs when we've got so much mismatch with all the things we're discussing at the moment. And if anything, I think years ago, we always had this thing about the plunge protection team in the US. And whenever something mad happened there, they'd come in and support the market. And you know what? It sort of feels the same at the moment. That we're actually seeing the same, because there's so much volatility in the equity markets. Whenever it should be going down, it isn't. And that, to me, is a big worry.
Thank you so much, Jonathan, for joining in this morning.